Hey everyone, welcome back to Corporate Decoder. Today ACF the C just filed an 8K related to their distributions, and I am seeing a couple of things that paint a picture of their ongoing strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a look at how the company is returning money to shareholders and how it is managing its growth. So what we have here is an update from Antares Strategic Credit Fund, the CLLC. Essentially, they are letting everyone know about a recent distribution to their shareholders. On the 30th of April of 2026, Antares Strategic Credit Fund, the C, announced a regular distribution along with a special distribution for their common shares. Think of a regular distribution as a normal payment they make, and a special distribution as something extra, maybe from good performance or a specific event. Table TR TDP gross distribution. Regular 20p TD TDP shareholder. Servicing and EOR distribution fee. VDTDP net distribution. Regular 20PD TDP special distribution. 20PD TDP net distribution. Total Sabi TD TD TR TDP common shares WTD TDP dollar Sabi TD TDP 0.1849 by TD TDP dollar Sabi TD TDP 0.0173 Fami TD TDP dollar Sabi TDP dollar 76 Dawi PD TDP 0.167 6 by PTD TDP $5p TD TDP 0.01521 p TDP $51 p TD TDP 0.1828 Fabi 28 Fabi D Twine table. Looking at the table, the gross regular distribution was about 18.5 cents per S hair, but a small fee of about 1.7 cents was taken out for shareholder servicing, leaving a net regular distribution of around 16.7 cents per S hair. On top of that, there was a special distribution of about 1.5 cents per S hair. So in total, shareholders received a net distribution of roughly 18.3 cents per S hair. These amounts were for shareholders who owned the stock on the 30th of April and were set to be paid out around May 29th. This cash can either be paid directly or reinvested to buy more shares if you are part of their distribution reinvestment plan. Now, let us talk about how the company is growing and selling its shares. Antares Strategic Credit Fund, the SU, is offering its common shares continuously through a private placement. This means they are selling these shares directly to certain investors without a broad public offering. They are using exemptions under the Securities Act, which basically means they are not going through the full registration process for all sales, relying on specific rules that allow for private sales. This is a key point. They are selling shares pretty much every month, and the price is tied to the net asset value, or NAV, per S hair. NAV is basically the total value of all the assets a fund holds minus its liabilities divided by the number of shares outstanding. So if the value of their investments goes up, the price they sell new shares at also goes up. This approach helps ensure that new investors are buying in at a fair market value based on the fund's actual holdings. They recently received about $1.8 million in subscriptions from investors who are not connected to the company, which signals continued investor interest in their fund. This next section gives us a snapshot of the fund's financial health. As of the 31st of March 2026, their net asset value per S hair was $24.71. This is the value of each share based on their underlying investments. The total net asset value for the company was around $75 million. But here is an important detail. They had loan commitments of about $197.3 million. Loan commitments are essentially promises to lend money in the future. This shows they have a significant amount of capital they are planning to deploy or have already agreed to deploy into loans. They also had about $85.3 million in outstanding debt. This leads to a debt-to-equity ratio of roughly 1.14 times. This means for every dollar of equity, they have about $1.14 in debt. They also have a net leverage ratio of about 1.07 times. Net leverage ratio is debt minus cash and investments divided by NAV. Both these leverage ratios indicate they are using borrowed money to amplify their investment returns, which is common in credit funds. On one hand, leverage can boost profits when investments do well. On the other, it magnifies losses if investments underperform. For a credit fund like this, managing leverage is absolutely critical. The filing is signed by Thomas Sweeney, their Chief Financial Officer. This just confirms the accuracy of the report. So what is the story here? Antares Strategic Credit Fund, the SU, is actively managing its portfolio, paying out distributions to shareholders, and continuing to raise capital through private placements. The key takeaway is their use of leverage and commitment to loan origination. The distributions, both regular and special, show they are returning value to investors. However, the leverage ratio means they are taking on significant risk. Historically, funds that heavily rely on leverage can be very susceptible to market downturns, potentially leading to amplified losses, similar to how leverage impacted some real estate investment trusts during previous financial crises. The risk I am watching is how effectively they can deploy their loan commitments and manage their debt in potentially volatile market conditions. What I am actually looking for is continued growth in their NAV and a steady or increasing ability to make distributions without significantly increasing their debt burden, especially if interest rates were to rise unexpectedly. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you liked this deep dive, please like, subscribe, and join our Discord.